Hey everybody, it's me, Adam Chapnick with the Security Token Academy. So today, we are pleased to bring you a corporate member interview with none other than Harbor. Harbor is a gold corporate member of the Security Token Academy. Harbor is an institutional-grade digital securities platform for compliant fundraising, investor management, and liquidity powered by blockchain technology. For investors, the Harbor platform enables online access to quality private investments with unique potential for enhanced liquidity. Today, we are going to learn more about the company, their products, their team, and much more. And to do that, we go to, where else? San Francisco, where I'm joined by Josh Stein, the co-founder and CEO of Harbor. Hey Josh, it's great speaking with you.
Hey Adam, thanks for having me.
So can you tell us how Harbor was created and give the viewers maybe a little background on the company?
Sure. The idea for the company originally came from David Sachs. He's a longtime successful entrepreneur in Silicon Valley. He's one of the original PayPal founders. He was raising his first VC fund. He was enchanted with blockchain technology, and he wanted to tokenize the LP interest in the fund. He wanted to allow for some liquidity in that VC fund. And what he realized as he dug into it was that there was no compliant way to do so, to both to issue the token and especially to control how it trades. And so using a traditional fund structure and you tokenize it at that point, you run into compliance problems down the road. So he had an aha moment. He said, there's a business here. And that's when he reached out, and our co-founders, Barbara Micah, Arisa Mano, and then they reached out to me and we started Harbor.
Amazing. So there are a couple of terms that we throw around in this space. One is tokenization, the other is securitization. They're related, of course, but can you maybe explain the difference for the viewers?
Sure. Securitization is an old process that happens all the time today. A great example would be mortgage-backed securities. So a mortgage is a loan, not a security, but people would take packages of mortgage, they'd put them together and they'd slice them up and sell those off, and those were securities. Those were bond-like securities. Equity in a company is securitization. So one person could own a company, a partnership could own a company, or you could sell off shares to a lot of people, and those are securities. Tokenization refers to taking those securities and digitizing them using the blockchain. So I think the best mental model to use was the transition from snail mail to email. It used to be written communications. We typed out a letter, we pressed print, we threw it in an envelope, we paid 50 cents, we waited 3 days. Then I can remember when we started pressing send, the content of the written communication is the same. It's in the English language, you're saying the same thing. But because it's in a digital format, that email is faster, cheaper, and easier by orders of magnitude to send. Similarly, when we take securities, a stock, a bond, a share in a private REIT, an LP interest in a fund, and we quote unquote tokenize it, when we digitize it, it now becomes faster, cheaper, and easier to issue that security, and more importantly, it becomes faster, cheaper, and easier by orders of magnitude to trade that security, to get secondary liquidity.
I love that. I have not heard anyone use the email to snail mail example. It's so elegant. So good for you for coming up with that. I think we're going to hear that often. So with this kind of new advent of this technology, what are the pros and cons of applying it across different asset classes?
Sure, I think there's nothing but pros to applying it across different asset classes. Adoption will vary over asset classes, and the amount of benefits it brings is different. So tokenization and the use of software platforms to raise funds are about two things. One is you can increase access, you can syndicate more widely. By using modern software platforms to onboard and vet the investor, you can, if you can draw the interest, you can efficiently process through a large number of investors. More importantly, you can provide liquidity. So I think, and liquidity is really the killer feature. So if you look at asset classes where they consume a lot of capital, they're sensitive to the cost of capital, and they're relatively indifferent to the identity of the investor, those are going to be the ones that maximize liquidity because they're going to allow any legal investor around the world to invest and to trade. And any incremental capital raising or lowering of the cost of raising capital is important to them. So in real estate, they have what's called a capitalization rate. You can almost think of it like a yield rate or a dividend rate, similar. If you could take a 5 cap down to a 4.5 cap because you could raise capital from more people more efficiently and they valued that liquidity, that is tremendous for the real estate industry, which is incredibly sensitive to the cost of capital.
Yeah, amazing, great examples. So we've seen a trend here about tokenization all over the place, but especially in the realm of startups. Where do you think that's going? What do you think about that?
I think tokenization is very interesting in the realm of startups. So we had the whole ICO craze, where what was being tokenized was not equity, it was not a security. It was a payment type, a currency for a software application. So Filecoin's a great example. It's a wonderful software project. And Filecoin is the way that you paid for distributed file storage, a distributed or a blockchain version of Dropbox. People went and bought them. They evaluated it like investments in companies. They were looking at the team, the technology, what they thought the adoption would get, but they were not buying equity in the team. The monetization was the hope that this coupon, this currency for use in the software, would increase in value. I think today what you're starting to see, and what Harbor is really starting to focus on, is tokenization of equity in startups. So it's very much a traditional stock, but by tokenizing it, by allowing for liquidity, that should attract more investors. Those startups can syndicate more widely, bring down the check size, attract more investors. Those investors value the liquidity. And so I think a lot of the aspects of ICOs that people liked, investing in startups, liquidity, low check size to get in, you can see with tokenized equity in companies, but it will be fully compliant. It's treated like a security, and companies like Harbor ensure that that tokenized security is compliant when it's issued and compliant every time it trades everywhere.
Yeah, that's exciting, I know, for early stage companies, because they really don't have a good way to keep a handle on their cap table if people start selling their interests and they don't adequately report back to the company that they've done it. That's a really nice benefit that the technology offers. Is that right?
That is, and that's what Harbor's focused on. I think sort of what distinguishes Harbor, or how our architecture and approach is a little bit different, is we track real world identity in real time. So that company always knows the identity of everyone on their cap table. Right. And we have a feature that allows them a fine-grained control over that. Some people are wide open on liquidity. They'll allow any legal buyer around the world to buy in and out. But there are a lot of startups that when you're talking about equity in the company, they want to be able to control it. They want controlled liquidity. And so Harbor has what's called the trusted parties feature that allows companies to designate who can trade either by name or by rule sets and limit liquidity to that group. So you could imagine a world in which a company tokenized equity and it would only be for their fans, say an esports team. And they would allow their fans to buy in equity of the company and to trade, but people who were not fans, who weren't season ticket holders or who didn't have a history with the team could not buy. Or for example, a company wanted to incentivize its key partners. So it has partners that it depends on to do better. We grant employees stock options all the time to make sure that employees are incentivized for the success of the company. Sure. Now, because of the controls you can have, a company can sell or grant equity to partners of theirs, but they can control trading so that only partners can trade, and the company always knows who owns what when.
Yeah, that's great. That's a real new way of looking at a company's equity as a deal-making unit. It's an interesting new world that'll usher in. So you talked about sports teams. That's a really interesting use case. What about real estate? I know you guys have been in that for, I think that was one of your first areas that you were in. Is that right?
Yeah, what we like to say is we didn't focus on real estate. Real estate initially focused on us. And
I like that.
Yeah, I think the reason why is just what I said before. Real estate consumes a lot of capital, very sensitive to the cost of capital. Anything that makes fundraising faster, cheaper, and easier, and particularly that allows liquidity later, because real estate, private real estate as an asset class, has almost no liquidity, is very attractive. But it's not just real estate that's focused on us, and so we've seen a real demand from companies, particularly startups, to tokenize equity in the company. And I think the sports one is a really interesting one, because what you can also do is that when you track real world identity in real time and you can control it, you can now bundle in with that equity ownership rights or perks that aren't normally associated with owning a piece of stock. So for example, if an esports team tokenized some of their equity, they could allow any shareholder to also get a discount on tickets or to events, have special events to meet the athletes. They could get special rights to merchandise. If you think of a professional sports team, like say the Knicks, tokenized a portion of their equity, they could say that shareholders in the Knicks get first dibs on season tickets, get to meet the players after the games a couple times a year. So companies can take things that don't cost them very much but are very valuable to fans and monetize that. And the fans are able to get access to things they couldn't otherwise and actually own. They are no longer just fans, they're stakeholders, they're shareholders. And so you're really able to align interests and drive engagement between fans in a team or between partners and vendors in a company.
It's a lot of the promises that we've heard really for years, going back to the Kickstarter and Indiegogo, the rewards-based crowdfunding, the engagement of a community, all the way through the equity crowdfunding and giving actual stake in the company that you have spent time supporting and loving. And then there's an element of you got the Green Bay Packers, the community ownership. Mm-hmm. It's kind of got the best of a lot of different flavors all baked into this. I think that's really exciting.
I think it's exactly right. You're taking the best aspects of a variety of different innovations in finance and engaging people, and now you're able to combine them all, and you're able to combine them all in a way where the company, the issuer, can have really fine-grained control. So the way that Harbor works is essentially every time that security token, that digitized share goes to trade, it pings Harbor. Harbor checks the who, what, and where of the rules. So those are rules around who the buyer and seller can be, what the trade or what the cap table is to look like, and where the trade can occur. So it may be that trusted parties whitelist where only certain people can trade, or there has to be an accredited investor around who the buyer and seller are. What the cap table can be is with private securities, there's always rules around maximum number of investors or minimum number of investors or holding periods. You want to control for that. And then a lot of companies want to be able to control where it trades. They want to choose, does it trade on an exchange and which one, or does it trade a dark pool or over the counter? And so technologies like Harbor's allows you not only issue those shares faster, cheaper, and easier, but it unlocks liquidity. It takes away these barriers to trade, but to be done on an automated algorithmic basis on the rules that that company sets.
Yeah, amazing. So back to real estate. You guys had your first security token offering. It was for something called the Hub at Columbia, which was a multi-million-dollar mega dorm at University of South Carolina. Is that right?
That's correct. The first deal that was available. It's we're really proud of our partnership with DRW and Convexity Properties. So Don Wilson owns Cumberland Trading. He was one of the first institutional players into trading of cryptocurrencies. He's also got a private equity real estate arm. And so this kind of combines all of his different backgrounds. His long background as a foreign exchange trader, his background as an early cryptocurrency trader, and his background in private real estate. And the idea now is to tokenize a REIT that's going to own a little bit less than half of luxury student housing outside of South Carolina, and to do a tokenized REIT so that you unlock liquidity, reduce all those barriers and frictions to trade. And this is an example of what we think is exciting, which is introducing liquidity to private commercial real estate, which is a completely illiquid class today unless you're buying and selling entire buildings.
So let me ask a question about that. So when you guys talk about the liquidity on that secondary trade, are you providing the same the marketplace for that, or were you tokens list somewhere else?
So we're not a marketplace or an exchange. We're a compliance protocol. So we're a software platform that onboards and vets the investor, that coordinates the signing of documents and the flow of funds in and out of escrow for the issuer. But then we are also this compliance protocol that ties into the platform that controls then how it trades. So that way an issuer can allow this to trade on one exchange, multiple exchanges, peer-to-peer, wallet-to-wallet, or what you could think of as over-the-counter. Yep. Essentially what Harbor does is we centralize compliance control of that cap table, and then we're decentralized as to everything else. So that company and those investors can use any exchange, any wallet provider, any qualified custodian. They can also use all these exciting technologies that allow you to very efficiently create levered longs and levered shorts like DYDX. That can allow you to create sort of micro ETF products called SET, or that can get you efficient margin loans like MakerDAO or things built on the Dharma protocol. And so these are all ERC20 standard tokens. They fit into the larger ecosystem with all these players. So essentially what Harbor does is all the important compliance rules that you don't want to mess up, or you have to go public, or you blow your tax treatment. We've centralized control of those for the company so that the company can control its cap table and can ensure compliance. And then we're decentralized as to everything else. So Harbor is not the exchange or the marketplace, but we are plug and play with any exchange or marketplace that takes an ERC20 standard token.
Yeah, it really empowers the owners to have a lot of options when it comes to that time. That's really important. So you guys are in the headlines now, which is exciting. Can you tell us a little bit about the new digital securities platform?
Sure. So we're launching version 2 of the platform. What we found was a real market demand for companies to engage with their investors. I mean, we think of it in terms of relationships. Relationships matter. And so before this change, the Harbor platform, the Harbor brand was very prominent. And now we've changed it around so that you really see the issuer brand. So you see the issuer's color scheme. You see their brand front and center, and then you just see a little Harbor logo and Powered by Harbor tag. So it's very clear that the investor is interacting directly with the company, and that company is creating and deepening its relationship with the investors. And then we've also launched with that this trusted parties feature that allows companies to have controlled liquidity, where it's not just enforcing the rules around the securities laws, but they can pick and choose a set group or types of groups of people to allow to trade. So fans, customers, existing shareholders, they can have controlled liquidity. And then we've also created a set of tools so that the company can administer their cap table to make it very easy to get reporting and communication with their investors. And we'll be rolling out additional features over time, like distribution of dividends, proxy statements, and we can already allow for the distribution of investor materials. And so it's a set of tools that are all around the company creating, building, and enhancing its relationship with its investors.
Spectacular. All right, so how do you feel about walking us through the dashboard from where you're sitting?
Sure. So I think why don't I try walking you through the life cycle of a security token?
Ooh, even better. Let's do that.
Yeah, and then walk you through how the dashboard works at the end. I think that'll make the sense.
Yeah.
So what happens is if you're doing a capital raise, the primary capital raise, you have there's a marking website. It'll be with this new platform. It'll be, let's say we're doing it for the Knicks. Not that we haven't talked to the Knicks, but love the basketball team. Let's say we're doing the Knicks. So it would be Knicks, or let's do the Warriors. It would be warriors.harbor.com.
Okay.
You would see some information about the investment opportunity, a little bit about the Warriors, the background. Are you interested? You'd click. You'd be invited to create an account, and it would still have the Warriors. It would still have the gold and blue. It would be all their branding, and so you would create a Harbor account. Name, address, social, date of birth, a couple of other pieces of information, a copy of your driver's license. We do a first level KYC ML check in 2 to 3 minutes, automated while you stare at your screen. The next step is if you need to be a credit investor, you go through accreditation checks. You upload the documents that prove your assets or income, or you give us the name and email address of a proper third party that can attest to that accredited status. Then you sign an NDA. Then you go to the offering page, which is a more fulsome website that has more information on the offering. It's got a copy of the private placement memorandum. It's a really long formal legal document that has all the disclosures and financials. Usually there's also a copy of a marketing deck that's a sort of an executive summary. And then there's also a subscription agreement, the legal doc. When the investor's ready, they sign the documents. Then they go through a payment order flow. They can pay in dollars. They get wiring instructions to an escrow account. If they want to pay in cryptocurrency, they can pay in Bitcoin or Ether. And there's a counterparty that provides a conversion service. You can think about it as though you're paying in euros and yen, and there's a bank that's providing a currency conversion service. The issuer is just getting dollars in that escrow account. When they've raised the minimum amount, the contingency in the fundraise, they break escrow, and we announce to the investors, congratulations, your investment's been accepted. So in the process so far up till now, it's a normal private capital raise.
Right.
But in this case, the Warriors, they can syndicate far more widely. They can take in far more investors than you ever could in a paper world, because we can efficiently, quickly, and cost effectively push them through.
Yeah.
And so now comes the crypto part. We create a wallet with a qualified custodian. We create the security tokens. We engage a Big Four accounting firm to audit the KYC AML, the accreditation, the financial flows, the documents. And we engage an education campaign with the investor. The investor has their account where they can see, hey, I own 10 shares in the Warriors. They can see the copies of the documents they signed. They can see links to a Warriors investor portal. They can see links to the exchanges or OTC desks where this is trading. And then they're off to the races, and they can go trade when and how they want. And the Warriors can sit back and relax and know that every time that share goes to trade, it pings Harbor. No matter where it trades, it pings Harbor. Harbor checks the who, what, and where, the securities rules and the rules that that company is asked for. And every time, if all those rules check out, the trade goes through, no one knows Harbor was ever involved. And the wonders of the blockchain are you can trade 24/7, 365 around the globe with near instantaneous settlement, no counterparty risk. But any of those things don't check out, the rules can't all be met. Harbor throws an error, and like an email message bouncing back, it'll say error would result in too many investors. Error would result in too few. Error, buyer is not on the trusted parties list for this company. And so that way, we've taken away the frictions of a paper world, and we've allowed people to trade freely to the limits that they can under the prevailing market conditions.
That is a great explanation for people who would kind of want to understand the real world way this would happen. So as a little bit of inside baseball, or maybe I should say inside basketball for what you were saying, this is what we would call, I think, and correct me if I'm wrong, it's a Reg D 506C because of the way you described this. Now, are you guys contemplating going into the general public with maybe a Reg A plus, is that, or something like that? Is that possible? Or is there a reason why that's not possible?
No, it is possible. We can support multiple different kinds of issuances. We think Reg D is that's the primary one used today in a paper world. And we think that's going to be the primary one for tokenized securities. But I think you will see Reg A's in time. Those require SEC approval, so those are going to have a longer lead time. You're going to see, I think, crowdfunding ones. There it becomes tough because you can only raise a little bit over $1 million into crowdfunding. And so I think as the ecosystem develops and the automated tools get better and better, it will become more and more economic to use crowdfunding opportunities. And then I think eventually you're going to see tokenized IPOs.
Yeah, absolutely. And I mean, I'm still excited by the examples you were giving earlier about how companies can take all of the hard work they did in building an audience or building a customer base, and if they're B2C, and then also attaching rights to the tokens. If so, I might own a little sliver of the company, but I also can, like you were saying, get backstage passes or meet somebody or get a better deal or get products first. That feels a lot like it could be a Reg A. It just seems like the possibilities, there's so many exciting use cases that'll come around the bend, but you guys are teed up nicely to just kind of take all comers.
Yeah, we think it's exciting. We've talked to several professional sports teams. We've talked to a number of other companies that are very interested in incentivizing their partners or incentivizing their customers. And I think what the key technology for us that was demanded of us and delivering on is that trusted parties list, that ability to have controlled liquidity. Because if you remember, this is all new for the industry. Today, when you buy a Reg D security, they almost never trade. And so the idea of liquidity is exciting, it's attractive, but it also is a little bit scary. And so the ability to do that on a controlled basis, that you can have fine-grained dynamic control over time, I think gives a lot of comfort to people, and it opens up possibilities that they wouldn't be able to do otherwise.
Absolutely, no doubt. I mean, that is a real-world problem solved. That's exciting. So, we meet people all the time. We have these events in New York, here, LA, all over the place. And people are all talking about, I'm thinking about doing an STO for this, that, the other thing. Now, as a platform, what should companies be looking for if they're considering doing an STO?
I think a couple of things. I think overall, they should evaluate 3 domains of expertise. Obviously, the technology. That company should have a really good tech stack and a good tech team. Capital markets expertise. This is, after all, a tool that has direct applicability to the capital markets, and I think you want to see people with a good capital markets expertise. You want to see some reformed investment bankers or traders or other folks with good capital markets expertise. And this isn't just true of platforms, it's true of exchanges or custodians or others. And then finally, I think you want to see a legal regulatory expertise. Do they have compliance people on staff? Do they have a long-term, high-level experience? Do they have good legal in-house staff or outside counsel? And so I think when I evaluate companies and services in this space, I think who's going to be successful and who do we want to partner with? We want to find people that have really good technology, that have a deep capital markets expertise, and that are really aware and cognizant and take seriously the complexities and legal regulatory issues around the securities field.
I love it. Okay, that's easy to remember. There's tech, capital markets, and legal. Even I can hold on to that. So tell us about you guys. Your team at Harbor, where you're located, and what should we know about you?
Sure, we're located in Jackson Square. It's one of the historic districts in San Francisco, right near the financial district. We have a small satellite office in New York with 4 folks, primarily capital markets people. We're a team that's very tech heavy with some of the great leading engineers from leading companies around Silicon Valley. We also have some great capital markets folks, some great compliance and legal folks on staff. And we've been at it for a little bit over a year.
Love it. Well, before we wrap, what can you tell us about your roadmap and any goals coming up?
Sure. So in terms of additional offerings that we're going to be providing the tech platform for, we've got a number of interesting things in the pipeline. We have some startup companies, both blockchain startups and other startups, that I think some of them are going to be wide open. Any investor can buy and sell. Some of them are going to be these controlled liquidity, trusted partners program. Some of them, you're going to see some VC funds. Some of them are name brand funds that are going to be creating tokenized funds that are pitched to smaller investors. So normally the check size to a large VC fund is anywhere from 5 to 15 million minimum check size. You're going to see some tokenized funds with these same premier VCs that have large institutional funds that are going to have much smaller check sizes in the 6 figures to get into. Not your average person on the street, but democratizing access beyond just the institutions and providing some liquidity. We also have some VC funds coming up where these are younger sets of folks, great track records, and they're going to be offering tokenized VC funds at a lower check size designed to appeal to a broader group of people. And then we've got some more real estate deals in the pipeline that we're really excited about, both tokenized funds and tokenized REITs at the single building level.
Amazing. Well, I hope you're drinking plenty of coffee over there because you got your work cut out for you.
Yes,
That's exciting. Well, Josh Stein, CEO, co-founder of Harbor, thanks so much for joining us today. We wish you and everybody at Harbor all the best of luck.
Great. Thanks so much.
Harbor is a gold corporate member of the Security Token Academy. To learn more, go to our website, securitytokenacademy.com, and click on the directory tab. And of course, the corporate member homepage. For everyone here at the Security Token Academy, I'm Adam Chapnick.